All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Tuesday, May 11th. So, another interesting day for these indices. I'll tell you, it's never dull the way that these trading days have been. First things first, let's go over the risk disclaimer. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for education purposes only. If the screen is blurry or you cannot see it properly, YouTube does take a while to render the high def version, so just give it a little bit more time and your screen will be clearer. I also do put this snapshot on my Twitter page, and you can follow along that way. So, what did we get for the day? Let's talk about first, of course, this column in the right, which is where things what the performance was for the day. And then of course what I always like to do is talk about this column over here too, which is what areas of the market was there more of a rally off of the open, or was there profit taking. So there's some interesting revelations when you go through some of these numbers. So first of all, S&P still finished pretty decently in the red for the day. That was down close to 1% for the day, just a little bit under that, about 90 basis points down. Qs flirted with going green a couple times for the day, but they finished just slightly in the red. IWM, same thing as the Qs, so the small caps came back decently. Again, if we kind of look at some of these numbers here, but the Qs finished from where they started for the day, they finished up close to 2%. So again, really nice, gave a nice trading opportunity from where we opened. Bonds, they continue to go a little bit lower here this morning. We can look at bonds. We can start with bonds. I didn't really want to cover too much here, but it is interesting to note. Remember what we said back on last Friday? I thought that was a revealing candle when bonds try to go higher and they failed, and they had this big end up being a big red candle. Well, we've had some downside follow through. Remember, we put on a trade for that last Friday. I went long TBT, which is the opposite inverse of TLT. That trade has been working nicely. I want to actually keep that on as somewhat of a hedge. It's not really a perfect portfolio hedge, but it's a hedge against higher interest rates, right? That trade does well. And I'm up decently in that trade that we put on Friday. So let's get back to the spreadsheet here. But if we kind of continue to go through here, golds did rally off the lows. Same thing with silver, and the VIX. The VIX still finished up 11% for the day. Didn't really kind of sell off at the end of the day. So let's start with the VIX, and then I've got some important levels to go through in the index charts, which I think is important. But we don't know. Last week we got a little bit of a bout, what I refer to as a bout of volatility, and now we got a little bit of a bigger one today. Now that's a toppy looking candle on a gap up, so we'll see if this kind of settles in. It didn't really settle in. Looking at the three different VIX instruments that I look at, the VIX, which is obviously the short-term volatility for the S&P, VXN, which actually was up less than what the VIX was, and I look at RVX, which is the VIX for IWM. So let's look at VXN really quickly. I don't think there's really much to kind of go on here other than a jump. You got to jump higher, just like you did in the VIX. So, some observations from today, right, from where we started the day. I did actually put out our if you're not a member of the Tribeca Trade Group, every day we do a pre-market session, which starts, right after 9 o'clock or a little bit after 9 o'clock. And we go over, kind of what I see as the biggest observations of the day, and how I'm basically, looking to kind of set up for the day in trade. And, a couple of things that I talked about this morning was that we got a pretty decent washout in sentiment, right? There's been a lot of complacency in this market. I know Helene Meisler's poll that she puts out over the weekend, where she talks about, what do you think is going to be the next 100 points in the S&P, higher or lower? And I think there was like a 59% voting that people thought that the market would go higher, right? So that and a number of other sentiment gauges, if you want to look at, there's a lot of complacency in this market. So I think that really kind of got shaken out the last couple days. Things, especially on the growth side, where you had a lot of people who are kind of underwater in some trades. Those areas really got shaken up. And when you shake that complacency out of the market, you tend to sometimes have a nice looking tradable bounce. And I think that was part of the day. And that's why I was looking at for today. And I'll bring up the trade blotter of what I did, but I was mentioning I'm looking for a bounce in growth, an oversold bounce. You're going to hear me say that a lot during this video. But I really thought that the growth names, could rally today from being kind of pretty decently hit over the head. So when we talk about, so sentiment complacency, I would remind you that one day is not a trend, so we're going to go over some levels here. Why don't we do that next? And then I'll talk about the sectors as I usually do. But there's a lot to go over, today. There's a lot of movers. So here's, first of all, the S&P, right? So the S&P, just to put things in perspective, again, which I do like to do that, right? I do like to put things in perspective, right? But when we look at performance year to date, we are still up a decent amount, even though things have been kind of shaken up a little bit. The S&P is up 12% for the year. So just keep that in mind. That sometimes is a normal year to be up 12%. And we've seen that in the first few months. So we've been on a really nice run. I think it helps to kind of put these things in perspective. And to kind of adjust how you're trading a little bit. But so now that we've kind of just talked about performance for the year, we're up a lot for the year. What are the levels to watch? Important levels to watch. Well, I know a lot of people are fixated on the 20-day moving average. I agree that's important. That's where the S&P is right now, right around that 20-day moving average. I do, of course, look at value areas quite a bit, as you probably have noticed in these videos and in my trading style. But here's the volume profile for the month of April. We draw that forward, and support for this month is 4102. We started this month trending. That pretty much got erased pretty quickly, and it is amazing how quickly the picture changes, where the S&P just looks super strong, the Dow looks super strong, and they kind of corrected a little bit the last couple days. I'm sorry, I don't want to say correction, but they just corrected in terms of price. Now we've got this level of support to trade against, 4102. We'll see how price and the market handles that tomorrow. For now, the takeaway is we're kind of right in the middle of the value area. So if you look, this is basically range bound. Right? We actually took that away from our August indicator, but we're inside. We're in a range right now, right? So choppy. You can also use that word, even though I think this market has been moving faster than just being choppy. I usually refer to as when we're going kind of sideways and not moving too fast. We've been moving a bit faster. The 80% rule played out, right? So what's the 80% rule, right? Well, when you start above or below a value area, when you start above or below the value area in the beginning of the month and you break into value, you could go all the way, there's an 80% chance that once you get inside that value area that you'll go all the way to the other side. Now, the other thing is we didn't start the month outside of value, but we did at some point get above value, and that was on Friday, right? So that then re-triggered the 80% rule, and we actually covered that today. So we did get to the bottom of value. So that 80% rule is complete. Here it's a bit more revealing, and I use the 1 hour charts a lot in my analysis because I am trading sometimes short term, sometimes midterm, and sometimes a little bit longer than that, right? So being that I'm trading on those time frames, I do look for direction and I look for important pivot levels, support, resistance, and so on and so forth. So what do we notice here? Well, the same thing happened here, right? we started the week above value. We dipped into value, at the end of yesterday, and we followed through. And not only was the 80% rule complete, but we actually went below value. So so is this anything to really hang my hat on? At the end of the day, to get bullish? No. We basically closed. We did not close back inside value, so we actually got. We were not able to. Yeah, we were not able to maintain value, even though we tested it a few times today. Right now, we closed off the lows. Right, so we could use the lows of the day as a level to trade off of. But all in all, this is not great looking, in my opinion. And you can see we're still kind of going lower here a little bit. But yeah, 41.47 is the level to watch for the overall market. So again, I always start with the indices because we want to know what the majority of stocks are doing, right? We want to know basically, the phrase that I use a lot of times is whether the wind is at our back, right, or the wind is in our face, right? We also look at market breadth for that too. You could see that it was kind of mixed on the day. Here's what advancing and declining names look like if you want to look at the stats for the day. You could see that you actually had in the Dow 28 decliners versus 2 advancers. In the S&P 417 decliners versus 88 advancing names, and the Nasdaq not as skewed as much because we did get that bounce. 1,615 declining names, 1,282. A lot of new 4-week lows being made in various different indices. All right, so that's kind of where we stand, and so it's the word I would say for this is inconclusive. We did not make it into value. Could we get back into value? We could. Notice what we did last week. We spent a lot of time trying to kind of fight to get back into value once we broke, and we had some trouble with that for a couple of days, and then we finally went at the end of the week. Could that materialize again the same way? It could. We could also come down in here and start to explore some other levels down here. So, first things first, I would be paying attention to the downside of 4106. So I try to always translate this to, or do a better job at translating this. What does that mean for me if we break 4102? Well, that means to me that I want to be holding less positions because the indices are starting to break down. Right? That would mean a move below the 20-day moving average, which is what we've already been doing, and a move below value, which means we are now trending down for the month. All right, even though there's 50-day moving average support. Let's move over to the Qs. So a lot to go. I spent a couple of minutes just talking about that. Let's look at the Qs. Right. Well, yesterday we closed right at the 50-day moving average. Today we started to go decently lower towards this version point of control down here. We did not take that out, and you can see we got a very big green bar. However, we did not get above the 50-day moving average. All right. So also, if you look at the 1-hour chart, we're still, we did not even get close to pressing back to taking back some levels that were violated. So again, I would conclude with this, and I would love to say more positive things, and we'll talk about some names that really did move decently today. But as far as the indices go, this to me, especially in growth land, looked like an oversold bounce. Now, could it be the start of something bigger? It could, but we obviously need to see some follow through. And I like to see a more, even though this was a nice day to trade, no doubt about it. There were some nice setups to trade today. I just don't know if this is going to be more than just that, an oversold bounce. So I still think you have to be kind of cautious here. At least that's how I am. Again, I'm not telling anybody what to do, but for me, until I see some levels to be retaken, that's what my view is for that, for the overall market. Now, let's talk about some of the other areas that rebounded pretty decently. Well, again, if you look at some of these areas, A couple of them were on the top of the list. Clean energy stocks. I mean, these things have really gotten hit over the head. Solar, rallied very hard off the lows today to finish up about 1%. Which is better than the how the overall market did. I highlighted metals and mining because they just continue to show strength. I think that's kind of one of the most interesting things for the day is that these metals and mining, I know that everybody's focused on the growth names and how they move today, but the metals and mining came back very nicely today and just off those 52-week highs. Notice they were back above value. Again, that equals trending and strong to me. All right, a couple other things, Chinese internet names. Again, these have been all the big underperformers. Biotech, which I viewed as a good sign right off the start today, they actually got positive. And, we're trying to go basically red to green a couple times, and then they finally did. They finished up 1.6% for the day. So let's look at a couple of these charts. Biotech I always view as kind of one of the first sectors that sometimes does turn around after a little bit of a market correction. So this will be something to watch for tomorrow. I would watch in the XBI. Notice we did get into value, so that's a good thing. But we're really right at that bottom of value. So 124.85. That'll be a good one to watch for tomorrow. Again, could provide a nice little signal possibly that for what higher beta areas of the market are going to do. Software, internet stocks, blockchain stocks, they all bounce decently. The semis finished green. Again, I'm still really concerned with this semis group. Again, it kind of looks like the Qs. It did not get into value. So again, we're going to have to see more of a move for this to kind of regain some of those levels. So that'll be another important level to watch for tomorrow. And that is for the semis 235.28. Okay, so as we're going through these things, right? Why do I spend so much time talking about the levels so much? Is because if you know where there's support and where there's resistance, right? You can make some important decisions, and you're taking emotion, right? You're taking predictions, right? We're hearing a whole bunch of different predictions on the tape. I'm really not a prediction fan. I know that younger traders on Twitter, they love predictions because I think they don't understand that really people are just throwing out predictions, and it happens, right? Younger traders think that some people know. Really, you don't. Some of the best people that I've heard, best traders and so forth, they really kind of analyze things and they put together an opinion, and they know where they're going to be right and they know where they're going to be wrong, right? They're not just, perma anything. So be careful about that. I really think that there's some people that are in the financial media that are just they're going to sound as confident as possible, and they're going to put out predictions, right? That doesn't mean that that's just because they sound confident that they're going to be right, right? All right. So again, my confidence is in my trading system. It's not in some opinion that I'm gonna make up, and it's a little bit of my market feel because I've been doing this for a long time. All right. So let's move on here. Let's talk about a couple names, right? So here is, by the way, what didn't perform well was the home builders, right? And I did think too, that's kind of really why I moved out of value the last couple days, and took profits where I could. I got out of my home builders trade yesterday. I got out of Mosaic yesterday. I got out of Dow yesterday. Here were some of my exits. I just thought that the value trade got a little bit extended, right? Value versus growth, of course. EMR was another one that I got out of yesterday. I was just very cognizant to say, hey, you had profits in about 5 or 6 different trades, all in the value group that looked a little bit extended in the short term. So that's what I was looking for this morning. And you could see me I had some issues with E-Trade, where I just, you could not see prices. You could not trade for the first 15 minutes. Otherwise, I usually do wait the first 15 minutes to go buy, but I just thought this was a good buying opportunity, and I missed prices in the first. You see me not posting anything, but I had mentioned, hey, I was trying to get into, actually Nvidia was the first trade I was trying to get into, and I gave up and went into some SMH. That SMH trade worked pretty well. I got out of that trade. Again, I wasn't really interested in being super greedy for the day, right? I got out of SMH, so the semi ETF 750 paid 650. I liked Roblox too today. I did not stay in this trade for the whole. This thing really got going. I was just looking for this thing to basically get to the top of value. I also thought it could have stalled here, so I took the money and ran. Just made a couple bucks in this thing, right? Around 71. So again, that was the top of value, right? So that's where I got out of this. So again, nice little trade. This will be an interesting name to watch for tomorrow, right? If you are interested in this name, I can't zoom out because that's all the history, I guess, that we have here. Right? Let me see if I could go. No, it's not letting me zoom out further. But the level to watch is 77.20. Right, so this thing had caught some momentum last month, stalled out decently, made took out this low, and then tricky how this happens all in one day. Goes from $64 to 77, right, after kind of very sideways sideways to down over the last month. So we'll see. Now you kind of have to reset. Even if you had some difficult time in some things, as long as I can define my support level, and I'm happy to try this one again with support of 77.20 for the day. All right, a couple other SC reports next week. Right, C Limited. I thought this name could bounce too. This is one of my favorite buy the dip names. So I did try this one on the break of the 5-minute value area. So again, I kind of waited a little bit. And I think in here is where I went long. I actually hung through it here and managed to get some profits. But again, nothing huge because I didn't attack this thing, in the beginning of the day. So a little bit late on that one. But again, happy to take targets. Hubs is one of my favorite software plays. So again, I thought Hubs could maybe get going. It did. I was able to take one target up at 505 and 510 off of this VPOC, and I'm still long a piece of that one. So everything that I have on, everything that I did today, I tried some Datadog today too. Small profits with that one, and then I took off a couple other things too. All right, so what did I take off today? FedEx got back down to my cost basis. That was a small trade I put on, I think, at the beginning of last week. Also LHX, right, also got back down to my cost basis, so I'm out. Right, so again, trying to stay as lean as possible right now. A couple trades that I thought were, so I kept on partial trade in Hubs, CME, which didn't exactly close on the highs. I was very close to taking target number 1 at 214, but I like how this looks, right, trying to break out here. Notice the sideways action and a break higher, good volume. So we'll see if this has some legs to it. I also like this one too. Again, trying to pay attention to what names really respond well after earnings. Look at this Summit Materials. Right, so nice trend here, and good volume on this push higher. So we certainly have seen this in a number of names in the material space that have really perked up after earnings and then kept running, like a Nucor, for example, right, which has been absolutely on fire since it had earnings. All right, so a couple names that reported after hours. A couple of these high growth, right, very risky names. This Fubo did take out this VPOC here at 22, right? So nice move in that one. I know a lot of people are, watch these names, right? I view these names as pretty damn risky. I think they were implying about a 21% move for the options for Upstart. I don't think it's, even though it's a nice move, it hasn't moved that much. So these names just, they're high risk. Unity needs to turn the corner here at 87.41. I just read the numbers really quickly before the video. I thought they had a decent quarter too. So that may be one to watch. But again, the levels are important. 87.60 will be the level to watch there. All right, guys, thanks for watching the video. Have a great night. So again, in conclusion, a nice tradable bounce. And unless we get more follow through tomorrow and the overall technicals look a little bit better, this may just be for now. I'm shortening up my duration and holding trades and the quantity of trades. Right, this way I can really stay nimble and move around this market as if it continues to move fast. All right, guys, have a great night. See you tomorrow.